Hello, my name is Dave Shepson. I'm an accountant and adjunct instructor. I've been teaching for several years, and I've put together a series of videos to help either introduce or help you review certain topics in accounting that are pretty common. This may be one of the most important videos because the issue of debits and credits seems to be the greatest source of frustration and confusion for accounting students. I don't think it has to be. I think it's the way that it's introduced to you, and I think it's much simpler than we make it. So the goal of this video is to turn the big, intimidating bear of debits and credits into a harmless little teddy bear like you see here. Before we go on, if you I would recommend, possibly before watching this video, unless you feel like you already have a really good handle on it, I would recommend viewing the video on naming accounts called What Is That? Because that goes over the definitions of some of the things that we're going to be using in this video. So the first thing I want to do is welcome you to the accounting neighborhood. And as in most neighborhoods, there are a couple of houses here. And we're going to say that the assets family lives in this house over here, and the liabilities and equity families, they live over here in this multi-family home. And there's a street, so they're on different sides of the street, kind of like you'd see in a typical neighborhood. And we're going to use this kind of metaphor as a way to understand the accounting equation in the accounting neighborhood. Every discipline has a language. I'm assuming in this video that you know what these things mean: assets, liabilities, and equity. If not, again, go back and review the first video about naming accounts. But it's important that you know the language of accounting, just like any other discipline that you're learning about. So in the language in the neighborhood, I'm not going to spend a lot of time here, but I just review a couple of things. We'll give you some examples of the people who would be in these families. I'm going to say that this road is not a road, it's an equal sign. And what I've done here is I've visually laid out the accounting equation. And the amount of people or stuff that lives on the left side of the street is equal to the amount of people or stuff that lives on the right side of the street. So there's the left and the right, and I don't think anybody has any problem understanding left and right. Very important piece of accounting language that I really want to stress here is that in accounting, we replace the word left and right with debit and credit. So in accounting, debit simply means left, and it doesn't mean subtract or minus like it does, for your bank account. And credit simply means right. It doesn't mean add or plus. Debit is not bad or good. Credit is not bad or good. It simply means left and right. So just visualize the street, and the left side of the street is the debit side. The right side of the street is the credit side. If we're going to get around and know what we're doing, we got to learn how to navigate the neighborhood, so the map helps. And if we're given a destination or a set of information, we need to know how to navigate. So we need to know where things belong. And if you're given a piece of information and you're supposed to record it into the accounting records, you need to know how to navigate the neighborhood. So these are just a few examples of the types of people, if you will, that live in the neighborhood, and we need to know what families they belong to and consequently which houses they belong in. So cash, for example, is an asset because it's something of value, so it lives over there. Receivables are also something of value. It's not cash, it's a debt that is owed to the company. So like accounts receivable or notes receivable would be examples. And those are also assets. They have a measurable value. Common stock is an equity account for corporations, and so it lives over there in that house. And payables are a debt or liability, and so accounts payable, notes payable, things of that nature, they live over there. So if you're dealing with a situation and you know what specific entities you're dealing with, you need to know what they are, what family they belong to, what house they live in. So here's how we ask for directions. If you're given a set of information, how do we record this into the accounting records? It's what's referred to as a journal entry, but I'm going to refer to it as navigating and getting directions. we have to ask some questions. First, we need to know which accounts are affected. Then we need to know where do they live. And where they live in accounting is referred to as their normal balance. So in other words, if they live in the asset house, then they live on the left side of the street and their normal balance is the left side, but we don't say left, of course, we say debit. So cash or accounts receivable would have a normal balance on the debit side because that's where they live. Then we need to know if they're increasing or decreasing. And finally, how much. So if you're given a document, hopefully it would have enough information that you can figure these things out. Let's use an example. Let's say this company buys $2,000 of merchandise on account. That means they're not paying for it yet. Okay, well, which accounts are affected? First of all, we have merchandise inventory or inventory. That's one of the accounts we use when we buy inventory. And I'm assuming here a perpetual method, but let's just keep it simple. It's an asset account, right? And then we haven't paid for it, so we owe for it, and that would be accounts payable. And where do they live? Well, merchandise inventory is an asset, so it lives on the left, and accounts payable is a liability, so it lives on the right. Now, are they going up or down? Well, they're both increasing in this case. Now, accounts always increase to the same side that they live on, or the same side of their normal balance. So if you're adding to an account, you are going to add to its normal balance or the side it lives on. If you're decreasing an account, you're going to put an entry on the opposite of the side that it lives on to decrease it. And of course, how much? We have $2,000. We know that. That's probably the easy part, right? Okay, so how does this translate into actually recording it and making a journal entry? Well, I know that merchandise inventory is an asset and it lives on the left side and it's increasing, so we're going to increase it to the left side. So I'm going to put that $2,000 entry to the left side. And payables live on the right side and they're increasing, so I'm going to increase it to the same side it lives on, the right side, or the credit side. And of course the amount's $2,000, that's a given, and voila, it works. My accounting equation balances as do my debits and credits, and that will be true of every single entry made in the accounting system if we ask the right questions. Now, we could go through lots of examples of what we just previously did, and I'm trusting that in your homework or reading or other things that you're going to do tons of examples of different types of transactions. That's not the purpose of this video. This is more just to lay down the concepts. I do need to point out that every house has that contrary member. In my house, it's my 4-year-old. Do you want ice cream? No. Do you want a cookie? No. You know, some people are just contrary. Well, the accounting families have contrary members, and they just like to be different. They're there for a reason, though. We all need those people. Some examples of contrary accounts that live in the families would be accumulated depreciation. That is a contra. We call them contra accounts because they are contrary. It's a contra asset account. If you recall, you may have not learned this yet, but if this is a review for you, accumulated depreciation is where we accumulate the amount we have depreciated on an item rather than recording, when we record a depreciation expense, the offsetting entry, rather than reducing the asset directly, the asset account, say for that building or car or whatever, just stays at its historical value. It doesn't change. And we accumulate the amount we depreciate into a contra account. It's like a sub-account that has an opposite normal balance. That contra or sub-account of accumulated depreciation has a normal balance opposite of its parent account, which would be the fixed asset. And so just think of contra accounts, they're always the opposite. So when you add to them, you add to the opposite side of the normal type of account you would. Draws are a contra equity account, as are dividends for a corporation. Sales allowances would be an example of a contra revenue account. You know, if you're a merchandiser or something like that. So we need to just remember these questions, because these questions are kind of like your GPS. They will guide you where you want to go. We need to first identify what accounts are affected and what type of account they are. And then once we know that, we should be able to answer where they live, so we know their normal balance. And if we ask then if they're increasing or decreasing, well, if they're increasing, we're going to increase them to the side of their normal balance. If they're decreasing, we're going to put an entry to the opposite of the side of their normal balance. And then how much, and that should be given in our information. So hopefully, if you just remember those questions and remember the map, remember the neighborhood, remember where things live, the debits and credits don't have to be horribly confusing. You don't have to memorize them, although you probably will if you do enough of it. But you just need to remember where things live, and you'll get your bearings and you'll do the right thing when it comes to recording those entries.